hope you guys read the disclaimer, so we'll hop straight on. Okay, so in this video we're gonna go over DOM effects. We're gonna be going over a market review on dollar, euro dollar, and potentially some other asset classes. So let's start off with the monthly. So in the monthly, we're using this one here because this actually is a bearish candle. If you look over here, the open is at the top and the close is at the bottom, so this is technically a bearish candle. It just appears bullish because it opened above here and closed above this as well, so it's registering that as a bullish candle. This would be the main bullish candle. We used that, used the low over here, and you can see 50% comes into 50% and rejected off of that. Over here you can see came lower to the 0.5 level, and it's starting to go up. This is also the monthly candle. Let me do that, it's clearer. Yeah, monthly candle to the high went to 50%, and then yeah, we are currently here. So what do we predict is going to happen? Well, our bias primarily bearish. Our next objective, as it's already taken here, and it's went up into around there, would be around this level here. This would be the 3 month or 6 month fair value gap. So we're expecting price to reach there. Now, how would that look like? So on the weekly, we've said that if it respects this level, it's going to continue lower, as we saw with this week. Well, the previous week respected that and then dropped lower. Now, next week we're predicting that it's going to continue lower, potentially past this low. So now we've got to see how far it can go up before it starts going lower. We have this order block here, however it's not necessary for it to reach there, purely because it needs to get to there relatively quickly. On the daily we can see this order block. There's no other fair value gap in the vicinity. Use this as an inversion fair value gap, so it's potentially going to take that out before it even tries to come up there, if it does want to create that range, and then continue lower again. But yeah, initial bias is dropping down to there. That means for euro dollar we're expecting price to reach that top. So you can see here, low, high, went into there, and now it is predicted that we may reach there, and then price may want to come back before continuing even further. Now that we've got that out of the way, we need to see on a lower time frame. Let me move that across now. So bearish day, optimum trade entry here, and another optimum trade entry here in the grey area and the green area, like predicted and said multiple times that this works. So because we are expecting a certain amount of retracement, how far can it retrace up to? That is the daily order block open. So we are predicting price can end up coming up into here before it starts moving lower. If it comes up into there, then we've got this fair value gap, so it might be a immediate order flow entry drill. So it just means tapping it there, continuing lower because it's got to close below here. With that being said, that will result in this being taken, this high being taken, so a certain amount of buy side liquidity will be taken. Let's move this along. So we want to see if it is going to go higher on the Monday, or would have to reach there ideally by this point. If that is the case, it's probably going to gap up a bit, start climbing higher into there, and then start to reverse from here, given an optimum trade entry here, reaching a particular level. For instance, this level, this is a 4 hour, I believe, fair value gap on the 4 hour. We want price to reach there, we'll take out this equal low. So it's a good objective for the start of the week. If it gets to there and retraces a bit, we'll look for another entry, potentially by the grey area, to then seek this low. So let's look at, it's 10 now, so price has opened up. It's creating equal highs here. If it is creating equal highs there, there's no real fair value gap in this range on the 1 hour. So we potentially may see price wick below here, continue to there, and then start to come up. Why? Because that is also on the 4 hour a fair value gap, may wick into this fair value gap over here, order block I meant for that. So that's our initial bias for the start of the week, coming down into there. Once we start to see it wicked this but respected it, meaning it closed above here even after going below, then we'll start to see if there is any incentive to start running higher pretty quickly. If we look at news, I'm pretty sure Monday is a holiday, bank holiday in the US, so it may be a bit of a rangy day, or it's just a day to offset everyone for the remainder of the week. Two opportunities. We've got news on Tuesday, we've got plenty of news on Tuesday. Wednesday, we've got 10 a.m. Eastern Standard news. We've also got FOC meeting minutes on the Tuesday. This is the Wednesday. Wednesday. Tuesday we've got enough news. Wednesday, decent bit of news. Potentially going to be ranging though until that 7 p.m. Oh, that's 2 p.m. Eastern Standard. And we've got Thursday. Got news there. And Friday we've got news here. So it's a pretty news heavy week. Only day I believe is Monday with no news. If that is the case, Monday potentially come up slowly. Tuesday 2 p.m. So Tuesday 2 p.m. is around here. That's what we'll be expecting the FOMC meeting minutes. So there's two options. If price is slow on the Monday, then we'll potentially see a market maker sell model where it's going up until that Tuesday. So it would mean creating the low, optimum trade entry higher, reach the high, here, wick low, optimum trade entry here, to then start going lower. So it would all depend on how fast and how aggressive price moves, how freely price moves. Yeah, so our bias is originally going to be bullish, and then once it gets to this level, we're going to switch bias to bearish. Why? Because the overall bias is bearish. So yeah, we're trying to look for shorts, meaning buys for euro dollar. We can show on the 1 hour. You see no fair value gap, slow movement lower, and then start to reverse. Now that we've got that out of the way, let's go on to GBP. GBP is a lot more, has been a lot more bullish, but you can see gap lower, potentially reach there. With this price action, it may end up doing it by Monday and then start to see reverse pretty quickly. For the Tuesday, hit the low, come back up for that meter minutes into another area for another optimum trade entry in the dark grey area. So that is our bias. Now pound dollar, expecting the same thing really, coming below these into there, for it to then start going higher. So that's our bias. Below here is what we're looking at. So yeah, that's GBP, USD, Euro USD, and dollar done. Now we'll look at bonds. Let's see how they done. So bonds, we've been saying for some time that ZB is the weakest of them all, and as you can see, we said it's potentially going to drop below there, which it did. On here we said it's a lot stronger, the 10-year note. We were hesitant for it to drop below this, and as you can see, it didn't try to drop below there. Did try, but didn't drop below there. Same with the 5-year note. Now from here, if dollar is going to continue bearish, what we want from here is these start to look to go bullish from here. So from this fair value gap, we want it to start going bullish. On here, we want price to respect that and then start to go higher. Want to see this used as an inverted fair value gap now, start to go above it. And here it wicked it, refused to close below it, so we want it to start coming up for this. Now we've got that out of the way, let us look at ES. We've been saying price to reach up into there. Let's look at the monthly. Price has went to there. On the monthly, it's seeing whether it wants to respect this or use it as an inversion fair value gap. On the weekly, it closed above here. Since this is technically the fair value gap, why? Because it's got that gap between the two candles, so we'll use this one. We'll potentially see a bearish week into there, and then before it starts looking to go higher, if it does respect this though, and starts moving higher, then we'll aim for here, or even this fair value gap. Nasdaq, or US 100. Went into there. You can see on the monthly, it's starting to look like it's using that as an inverted fair value gap. On the weekly, since it's more bullish than S&P, it may look to reach into there to then start moving higher. That is where we want it to go to, essentially. So if it does decide to go there, that's great, but it would need to respect this fair value gap, that wick, that open, and then look to reverse from there. Now let's look at Dow Jones. You can see this is the weaker of them. All of them use this as a fair value gap, and it's going lower. We'll potentially see it come down to there if the others decide to drop lower as well. It would need to respect this, and since it's the weekly, it's already respected that, so the next week we don't mind it opening, coming lower, and then coming back up, for it to then start looking for these highs. Now we've done all that. I think that's all the stuff. We'll look at a bit of gold. I'm not necessarily going to trade it. In one of our videos we did say look for this fair value gap for it to start going higher, and would you look at that? Potentially going to create new highs at some point, purely because these are too equal for it not to reach there. And we've went over all the major pairs, and we've done commodities, we've done bonds, we've done indices, and if you guys enjoyed, leave a like. If you guys want more of this, make sure to subscribe and turn on notifications so you're up to date when I go live, so you guys can join in. And thank you for watching. Please leave a like and